So as you can see by looking at this graph, if your income, if you file your tax return as an individual or a single and your income is up to $88,000 per year, or if you file your tax return as a joint or a household and your income is up to $176,000 a year, you will pay the base Medicare premium of $148.50 per month, and that's per month, and that's per person. That's a per person premium. If you're collecting Social Security income, this is going to come directly out of your Social Security income. If not, the Social Security Administration will bill you for that amount of money. But as you see, if your income is higher, and you see the different income brackets here, you will pay a higher Medicare premium. So a couple things to note here is, number one, this premium is the same for each spouse. If you file your tax return as a joint household, it doesn't matter who the breadwinner is. Both of you will pay the same premium based on your household income. In addition, this is not just W-2 income they're looking at. What they're actually looking at is your modified adjusted gross income. So this unfortunately cannot be found as a reference anywhere on your tax return, but I always tell people, look at the bottom of the first page of your 1040. That's going to indicate your taxable income or your adjusted income. This is a very close estimate as to what they will be looking at when determining your Medicare premium. So that's a real good indication. But possibly most importantly, it's good to know that they're looking at your income from actually 2 years ago. So when you go to apply for Medicare, which you're doing through the Social Security Administration, they don't have access to your current tax return. You may not have even filed it yet. So what they do is they look at the tax return from 2 years ago because that's the one that they know that they'll have on file. And they're going to base your premium on that. And you may be thinking, well, that's no good because 2 years ago I was actively employed and earning a much higher salary than I will be now that I'm retiring or cutting back on my work schedule. So why am I having to pay more because of what I earned in my past? And the answer is it's not always going to be that way. So there's a couple options here. If you're at a higher income and you anticipate your income to be going down in retirement when you enroll in Medicare, number one, you can just wait it out, because every year the Social Security Administration reevaluates your income. So at the end of 2021, December, they're going to look at your 2020 tax return when assigning your premium for January 2022. So it's always 2 years back that they're looking at, but each year they update it. So the Social Security Administration won't find out that your income went down in 2021 until they do the review for your 2023 premium. So your premium will go down at that point, but guess what? They're not going to pay you back for the overpayments and premium that you made for the past 2 years while you were earning that lower income. So what we normally recommend, and as we talk to you, we find out about your income and how that's going to change. And what we normally recommend is that you file an appeal. And we can send you a copy of the appeal form. It's called a life event form. And by the way, any forms that I mentioned throughout this presentation, if you'd like to have a copy of them, simply type it into the chat box or send us an email at medicare@hta.financial.com, and we will happily send you a copy of those forms so you can see what they look like. And of course, as we work with you and consult with you, any forms that are necessary, we will supply you with those forms and specific instruction on exactly what you need to do with them, where to file them, and so forth. But this life event form gives you the opportunity to indicate that you've cut back on your work hours or you've retired altogether and that your income's going down. And you state what your anticipated income is going to be in 2021. And at that point, they will do a manual review and they will lower your Medicare premiums now based on what your anticipated income is going to be. Now, what happens is 2 years from now, when they do that automated review, if they find out that you underestimated your income and you actually earned more, they will come back and charge you the difference of what you should have paid versus what you did pay. But it doesn't hurt to ask. And if you do legitimately anticipate your income's going down, why pay more for Medicare if you don't have to? So we typically recommend you file the form. It takes maybe 5 or 8 minutes to fill out. It just asks a couple of questions about your income. And then you send it in, they'll review it and assign you your new Medicare premium.